Hello, guys. It's another wonderful day to talk about Tesla's impressive performance so far and the milestones yet to be achieved. And now that Tesla has already released both a fourth quarter delivery report as well as the earnings results, investors have a data point they can use to assess the outlook for the stock. People who are bullish on the electric vehicle maker definitely expect a lot. But what is it going to take for Tesla to stay on top of the industry in 2022? Stay tuned. So this year, Wall Street is currently projecting deliveries of about 1.42 million vehicles, including 296,000 in the first quarter. That would amount to another year of big growth. Tesla has two new manufacturing facilities in Texas and Germany that will be ramping up production early in 2022. The ability for Tesla to sell all that's coming out of its factories will be a big swing factor for the stock in 2022. That said, it appears Tesla has gotten most of its supply chain issues under control faster than most of its competition. Even though Tesla's share price has bounced around a bit this year, the stock has a clear shot to better results ahead. Back in early November 2021, Musk asked on Twitter if he should sell 10% of his Tesla stock. He also said he would abide by the results, and he reiterated that he doesn't take a cash salary and the only way to pay taxes is to sell stock. There are other arguably less desirable options Musk could have potentially explored, but selling stock was the most direct plan. Musk was selling shares to pay taxes on options that he was exercising. Those options are set to expire this year, and Musk would be crazy not to take advantage of them. That said, at a tax rate of 53%, all things considered, he had to sell some 10% of his stock to pay the taxes. Of course, that had a significant impact on the share price as we witnessed at that time. The question is, should investors be worried about more Tesla stock sales by Elon Musk? There's a slim chance for more Musk sales related to options exercise and taxation in the middle of 2022. Investors shouldn't fear that selling, though. They should probably cheer for it to happen because it would mean strong margin performance despite the startup of new manufacturing capacity. Tesla has two new plants coming online in Germany and Texas. New capacity can drag down margins as fixed expenses hit the income statement while production ramps up over the course of a year or two. What's more, if the final options end up vesting, they shouldn't have anywhere near the impact on Tesla stock that recent selling has. So in a nutshell, we don't really anticipate anything that could stop Tesla stock currently, but there has been some concern arising from Elon Musk's comments during the January 26 earnings call. A while back, Elon Musk said that he would stop attending investor conference calls unless there was something important that he needed to say. And some people seem to think that Elon should have stuck to that plan. After skipping Tesla's third quarter call, he returned to the call on January 26 to discuss the fourth quarter's record earnings and revenue. But his comments spooked investors despite Tesla's successful financial results. Tesla shares had their worst day in months on January 27th, while taking the other EV stocks down along with it. So now the issue is that Musk focused his comments on supply chain issues that had hurt Tesla far less than other automakers. Although Musk said Tesla was on the path to be comfortably above 50% growth in 2022 and that the chip shortage is better than last year, he also noted the supply chain problem is still an issue that could slow the rollout of new vehicles that had been expected as soon as this year. He said that the plans for Tesla's first pickup, Cybertruck, would be pushed back to at least 2023, along with a new Roadster and semi-truck. He said he hopes Tesla will be ready to bring those to production hopefully next year, but it turns out that wasn't what investors wanted to hear, especially as competition heats up. Upstart EV truck maker Rivian is also building and selling its electric pickup, which recently won Motor Trend Truck of the Year honors. Ford is due to start building its F-150 Lightning EV in the spring and plans to produce 80,000 trucks a year to meet strong pre-orders. General Motors announced that it would start building an EV version of its Silverado and Sierra pickups in 2024. Some Wall Street analysts were frustrated by Musk's comments on the call. Dan Ives, a tech analyst at Wedbush Securities, said that there was no reason that he needed to double down and shout supply chain into a crowded theater. Ives is convinced that if Musk was not on the call, the stock probably would have been up the following day after the earnings call. None of Musk's comments directly address the situation at other EV companies, but all the pure-play EV stocks fell sharply on January 27th. Rivian fell 10.5%, while Lucid shares tumbled 14.1%, and Chinese EV maker NIO had its U.S. shares fall 6.8%. I've said Musk comments raise concerns that if an EV maker as big as Tesla is facing problems, its smaller upstart rivals could be suffering even worse, and that's what sparked the Tesla sell-off. But even with the sell-off, which continued on January 28th, Tesla shares are worth more than the market value of the 10 largest automakers in the world combined. That shows how massive Tesla is, definitely the largest EV maker in the globe. And the fourth quarter results announced on January 26 are a reflection of Tesla's giant status. Tesla reported record revenues of $17.72 billion for the fourth quarter of 2021, up by 65% year on year, and record profit of $2.32 billion, up by 760%. The company set a new record for its vehicle deliveries at 940,000 in 2021, with an annualized vehicle production run rate of over 1.22 million during the fourth quarter. And do you know what's even more exciting? Tesla was able to pull off such a massive performance even with the prevalent impact of global supply chain disruptions and a shortage of semiconductor chips. Tesla aims to increase production as quickly as possible, not only through ramping production at new factories in Austin and Berlin, but also by maximizing output from established factories in Fremont and Shanghai. The company believes that competitiveness in the EV market will be determined by the ability to add capacity across the supply chain and ramp production. Tesla has enough liquidity to fund its product roadmap, long-term capacity expansion plans, and other expenses. While the company will continue looking to reduce its manufacturing and operating costs, it expects profits from the software side of the business to accelerate. Full self-driving still remains one of Tesla's core areas of focus. More importantly, FSD is a key component to improve automobile safety as well as further accelerating the world's transition to sustainable energy through higher utilization of Tesla's vehicles. Now, the future direction of the Tesla share price will depend on, among other factors, the continued uptake of EVs and the status of the automotive supply chain. It will also likely be influenced by the direction of the stock market and the impact of central bank monetary policy. Well, the automaker beat expectations during the final stretch of 2021, with double-digit revenue and gross margin growth. So Tesla sales will comfortably grow above 50% in 2022 compared with last year, despite supply chain problems, thanks to their new factories starting up and current plants boosting output. Tesla has navigated the chip supply shortages better than any automaker globally over the past few months, which is why Tesla is in a clear position of strength to be successful this year. We also believe that 2022 will be the year that demand for Tesla vehicles, which is the key to success, will shoot up even higher, especially with the Chinese market targeting more electric vehicles. So for now, we are super grateful that you tuned in today. Remember to like, share, and subscribe. Stay safe, and we'll see you next time.